Good morning, everyone, and welcome to the European crossover webinar. And we did see the dollar going and continue its move back. And right now we're looking at the dollar yen. The dollar yen's kind of pressing a little bit lower again. We'd actually hit some targets and still on way on down eventually to what we believe is going to be that 927. Do have our Asian analysis, but let's go on and take a look at some of the markets here. One of the keys was right here on the euro. After breaking this downtrend line, looked like it's set where it could start to move higher upon that German data on Friday. Really just completely dropped and changed the complexion of this to move lower. Now, as I said, we'll be looking at the analysis. What we're looking at as far as where the market would have to go. We're a bit oversold here, maybe a little bit of a bounce due coming in, and we are seeing that right now. We're actually on the morning's highs right now here at this 1320. You can see here I've got a line here coming around 1334. But we'll go on and get into the Asian analysis on that. Cable's just working just a touch bit higher here. As I mentioned, the dollar yen, we had sold off quite a bit, on Friday. Obviously accompanied with, or really possibly leading a little bit here with the S&Ps so weak. We had last week reached our initial target, which was the 1034. We're looking for an eventual move down here to 927 here. And gold continuing to work a little bit higher. So let's go on and move into the news, kind of get an overview, and then we'll move into the Asian analysis. So Brexit endgame as power ebbs from PM May. Theresa May is battling to remain in control of the Brexit process, but could see it definitively pulled out of her hands in the next day or so. Pressure is growing inside her own party for her to announce a date to step down, even if it for now her would-be successors are denying any such plan. Parliament is expected tonight to set aside Wednesday for a series of test votes on that what outcome, if any, would enjoy majority support of the House. There is, assuming her deal does not pass at the third go, in a vote tentatively scheduled for Tuesday. Before all that, May faces her internal critics at a cabinet meeting this morning. The victory of the centre-right in Sunday's regional election in Basilicata in southern Italy is a hefty setback for the already shaken national coalition of the League and the Five Star. Fresh from hosting China's leader at the weekend, Prime Minister Giuseppe Conte vowed that the election would not be destabilized the government and argued against holding early elections. The defeat comes only days after another piece of bad news for Five Star, with one of its top officials arrested last week on suspicion of corruption in the Rome graft case. Let's take a look. In Germany, in Munich-based Stifel Economic Institute will publish its closely watched business climate index for March, which is forecast to edge up slightly after 6 consecutive fails. The read is due out at 9 GMT. That may have just come out. Hang on. I'll try to pull my economic news calendar, and that one, there was something, an issue with that. Let me see. We'll get to that. See if I can pull that up. I had to restart. Anyway, moving on. World markets have shuddered again the threat of recession after Friday's inversion of the U.S. Treasury yield sent 10-year borrowing rates below 3-month rates for the first time since 2007. Far from being soothed by this month's dovish monetary policy signals from the Federal Reserve and European central banks, and futures markets starting to price in the change of a U.S. interest rate cut of this year. 3 months ago, they foresaw 2 of 3 hikes. Investors are taking all the information at hand and assume world growth and corporate earnings is slowing, with German manufacturing surveys on Friday showing the sector there in recession and U.S. counterparts slowing below forecast. The yield curve inversion set all equity markets and risk assets tumbling. Wall Street stock indexes fell the most since early January at the end of the first quarter approach, with the VIX volatility gauge jumping back above the 17-month to 10-year Treasury yield curve still inverted. Monday German 10-year yields below zero, and S&P 500 stock futures down again. I think Steve made a good point that on Friday we're actually having to, you'll actually have to pay the German government to hold your money. Moving on, the MSCI Emerging Equity Index recorded its worst day of the year so far as to Monday, with losses of almost 1.5%. The MSCI's currency index was down for the second day after its worst day since December on Friday, hampered by domestic and international political problems and a central bank move that tightened credit on Friday. And let's see. And as far as the Robert Mueller found no evidence of President Trump and his campaign team colluded with Russia during the 2016 election campaign in Europe. Sterling was stuck as the next stage in the Brexit saga was due to play out late Monday with parliamentary votes aimed at giving lawmakers greater control of what the country does next. And let's take a look here. I think that economic calendar is finally coming up. Hold on. Popped up with an error earlier. Okay, here we go. Let's see. So German IFO did go and come up, and there was a little bit better improvement here. You see it 99.6, Reuters poll for 98.50, and better than the previous month. So a little bit better news that probably helped go and push the euro higher. Coming into the States, we have no data whatsoever here. So German IFO was the single mover of the day. Let's go and move that out of the way. Germany's 10-year bond yield rises back above 0% after the IFO survey. And moving on to Fridays, the Canadian dollar weakened to a near two-week low against the greenback as Friday's move in the bond market and domestic retail sales data point to a slowdown in Canada's economy that could forestall further Bank of Canada interest rate hikes. The bond market is flashing major warning signals about the U.S. and Canadian economy, said Adam Button, chief currency analyst with Forex Lab. There are an abundance of worries in the Canadian outlook, and it would be surprised if the Canadian dollar didn't fall further from here. It's also set up technically. We're going to get to that in the Asian analysis. It was a good close, so it looks like it pretends for us to move higher in the dollar CAD. It's all consistent with the slower trajectory in Canada, said Andrew Kelvin, senior rate strategist at TD Securities. The Bank of Canada has hiked interest rates by 125 basis points since July 2017, but said this month there's an increased uncertainty about the timing of further rate increases. Money markets see about a 60% chance of a cut this year. Decline for the lending claim as weak factory data for the United States and Europe feel fears of a global economic downturn. And two last pieces of news on the Aussie and then the yen. The Aussie New Zealand dollar's bludgeoned and its bond yield records hit lows. The Australian New Zealand dollars were covered by global growth concerns on Monday, while bonds extended the recent eye-popping rally to drive many yields to all-time lows. The Aussie dollar was stuck at 7.75, having fallen miserably to hold last week's brief top at 71.68. The Kiwi fared a little bit better at 68.75. To set aside the slide following disappointing manufacturing surveys from across the globe, and especially Europe, weighed on risk sentiment and prices for industrial commodities, including copper. Sharper declines in commodity prices and VIX at least above 25 are probably needed for the Aussie dollar for the value to sink below 70 cents. The run of poor economic data has also seen inflation expectations crash and add to the downward pressure. Yields on Aussie bonds have dived almost 20 basis points in just a week to hit a record low of 1.77. And lastly, here with the yen gains as global economic worries drive risk aversion. The yen gained a cost as it appears on Monday, touching a 6-week peak versus a dollar as falls in markets of global economic slowdown fuel demand for Japanese currency. The yen, a perceived safe haven which attracts demand in times of market turmoil and political tensions, was about 0.15% higher at 9.79. Stocks across Asia retreated in tracking global peers after the weaker than expected U.S. and European manufacturing data on Friday intensified fears of a global economic slowdown. Bad economic data should not come in as a real surprise to the markets, but hopes for improvements in Sino-U.S. relationships and with the U.S. had overshadowed economic woes. And now we're seeing some of the excessive expectations being curtailed, said Koji Fukaya. The yen is gaining broadly, alerted, albeit by default under such conditions. The dollar had already taken a big hit against the yen on Friday when the spread between the 3-month T-bills and 10-year yields inverted for the first time since 2007, following weak U.S. manufacturing PMI data. A much weaker than expected German manufacturing survey released on Friday also raised concerns on Europe's biggest economy and the wider Eurozone. The currency markets showed limited response to an official report about President Trump about not colluding. And let's go on and move on to the analysis. Okay, it says on with the euro, Friday's failure of a trend line has bears in full control. Initial downside target is 12.35 with a potential for 11.49. Euro would need a daily close above 13.60 to neutralize the downside pull. So let's go and move into the euro. As I mentioned, the break of this trend line after breaking and setting the market technically to move higher, and we came back to test on Friday or Thursday, and everything looked pretty good overall. And then you can see here this test, everything looks fine. Come back and test, you have potential to move higher, and we do move higher initially. And then we start to pair back, and then that data comes out. And actually, we just trading right around the 1380, if I remember correctly, when that data came out. And boy, did we take it for a pretty big tumble here in the euro. So there we are. Let's go on and move into the daily. So we have the potential to move lower, and it's almost like a matter of default. The one thing that may keep the dollar a bit at bay is because of those yields, and so we'll go and see how that plays out. The key here, at least initially, is going to be this 1340. You know how that's been that key driver before. Remember here, we tried to stab against it, couldn't, got above, we still couldn't close, stab up, we still couldn't close it. Eventually, we finally closed above it. Well, that would be your key resistance at that point. We can point at different areas like 1334, and we can move into the 2 hour. But your real resistance is coming in right there. All right. It's going to come in right there at 1340. So if we can get a good extra push, and actually when you look in here, yeah, it's called 1341. Now, for things to turn around, as I mentioned, we'd have to get above 1360. And if we were to get a close above 1360, then that would neutralize. It doesn't turn around all of a sudden make it bullish, but it would be key. Then we'd get back above this trend line. But it would neutralize the downs. It would neutralize the downside. Now, even if it gets above 1360, I think people would be cautious. They wouldn't want to all of a sudden turn around and go back to bullish. But what it would do is it would neutralize the downside pull. But once again, we'd have to get a daily close above 1360 in order to do that. Support is going to be right there. It's going to test in here at that 12, right, that we'll call it 1279. Look, we just got the German data. And the market's holding here, but there's no news out here. So other than that, so we may just languish around and bounce around. We may even fade back a bit, but so right now the real support will come in there at 1279. Let's go move into the cable now. Cable's recent pullbacks, followed by upside breaks, suggest a break of the current downtrend would target 34.24. A break lower would find key support at 30.65. Initial support is 30.95 with the initial resistance at 32.65. With the initial resistance. So let's move back in here. Now what I was referring to is, we haven't done it yet, but you can see here, we break it, or we march up. Then we break it, and each one's successfully a little bit tighter here. We break it, and we move up, and we break it. So if we were to do that, we're talking about the potential. We can go up here to this 34.24, but we haven't broken it yet. I mean, we're on the cusp, but we've not broken this. So right now, what we're referring to, initial resistance is 32.65 with support at 30.95. You can see coming here. We're on the cusp here, but if we were to go in and break here, that's what I'm looking right there. 32.65, right there. Coming in. See this ridge coming right across. Right there, 32.65. And support coming in at 30.95. Just below that. We have to give it a little bit of room here. Right there, 30.95. Let's go move into the Aussie dollar. I don't know why this thing's acting slow. Okay, now we're going to move a little bit quicker now. Okay, so the Aussie's failure of a key critical level of 71.42 has the market resting on the trend line. The market is targeting 68.90. Initial support is 70.18 with resistance at 71.18. The market would need a daily close above 71.42 to neutralize the current bearish setup. So let's go and move in here. And what are we referring to as far as sitting on that trend line? Well, here we are. Right here. And we were just resting on that trend line. We took a little bit of a dip below, and now we've come back up right here. But as I mentioned, looking at here on the daily, we think there's a potential for the market to eventually go on and make a move down here to 68.90 here. Now, initial support is going to be 70.18 with resistance at 71.18. So 70.18, 71.18. And we would need a close above 71.42 to neutralize this bearish setup. So moving back up here on the 2-hour, get a little bit clear. So we actually need a close above 71.42 to neutralize it. But right now, it doesn't look good for the Aussie. The key thing was we got above and we actually challenged the 71.42. That's a key level, 71.42. And for us to turn around and then lose it, and then not only lose it, but lose it with gusto, certainly has this market set up to move eventually. I know Blake's also looking for this market to move much slower. So once again, resistance is going to come in right there, 71.18. You can see that right there. But we would need to close above 71.42 to neutralize the downside bearish setup. Doesn't change it to bullish, but it would need that 71.42. So 71.18 for the resistance, 70.18 for the support. So now we'll move into the Swissy. Well, on a short-term basis, looks like we have a little bit of a double top, and the Swiss sometimes takes a while to go on and get moving, and we pushed a little bit lower here to the downside. The dollar's a little bit stronger, but then again, we're moving into that risk sentiment, so you may continue to see a push lower, and I think that push lower can eventually take us down here. It was 98.69, so that's going to be our support here. The key thing is going to be at 98.69. Resistance in the meantime is going to split the difference right in here. It's going to be 99.36. I apologize, 99 right there coming in. 99.96. So about almost 60 pips higher coming in right there. 99.96. And let's go move into the dollar CAD. Now we saw quite the turnaround here with the dollar CAD. Since the dollar CAD has closed above key daily close, closed above key daily level 34.18, opened the door for an eventual challenge to 36.50. And it certainly looked, it was tough, this last week, but boy, things have really turned around. Daily resistance is 35.05 with initial resistance at 34.49. A daily close below 32.95 will negate the upside bias. Initial support is 33.53. So as I said, that initial resistance is going to be 34.49. Let's take a look at the dollar CAD. So this is key for us to go on, and boy, did we turn around. Look at this. After we get a little bit of this hammer bottom, and it looked like the market may be getting tired here, and we slide back. We come back real strong. We come back again and test a little bit low, not as low, but pretty good strong test here. We actually finished lower, thinking the market might have been a little bit of a fake out, and then we come back with resilience, and then even finish Friday above this key 34.18. So that opens the door eventually for a move up here that we're talking about, 36.50. So let's go and move into the 2-hour chart to see where we're standing here. Well, we talked about the support here, and let's go back in here. Initial support is 33.53. And initial resistance. It's going to be right there, 34.49. And that's on the 2-hour chart, so we're already there. Right in here, 34.49. We've actually already made a pretty good little run up here, but that's going to be our initial resistance, 34.49 here on the dollar CAD. Okay, moving on to the dollar peso. The dollar peso came back with a vengeance, forming a hammer bottom on the weekly and closing above 1905. Resistance comes in at 19.18.6, confluence with the 19.18.4, the 50% of the move from 1874 to 1962. Support comes in at 1902, and value selling will come in at 1932. So a lot of information there. So as I said, we came back with a vengeance, forming a hammer on the weekly chart. Okay, hammer bottom with, and also what was key is a close above the 1905. Now I mentioned the 19.18.6 is a resistance level confluencing with the 50% and support coming in at 1902. So let's go and take a look here with the peso. got a nice little hammer here after testing these key lows, and boy, this thing fell way further than I would have ever expected. We came back quite a bit. There's a weekly. We'll go and take a look at the daily. We made a pretty good challenge here. Oh, there we go. I was wondering where all my data went. So you can see it here on that we came up here to challenge this 1918.6. Well, 1918.4 is a 50%. So we saw a pretty good run back here in the peso. And we're going to find out, well, where the heck is all this support? So let's go move into the 2 hour. So the key thing was also, and let's move into the daily too, go back there, was we also closed above this 1905 right here. I thought that was key. You can see that coming across. So not only did we turn around and bust up higher, but we closed above 1905. So let's go and move into the 2 hour now. As I mentioned, 1918.6 is going to be key resistance here, which also confluences with the 50% of this entire move here. It's a whole entire move here. Now, support is going to come in at 1902. We got this. There we go. So it's going to be 1902 for support. If this market slides back. Now, if you're looking for something a little bit closer, it's going to be right here at this 1905. But can the market give back a little bit? That we'll go in and see. But I'm saying, is this where the real support is going to come in? If you basically, this is your risk level here, this 19.019 right there. Definitely don't want this market sliding beyond that. So if you're getting long on pullbacks, market has to hold that 19.019. Okay. On the upside, well, once again, it's just going to be this 1918.6. And it seems like it's a wide area, but we had such a big move here. So if people are saying, you know, I'm going to get long, I'll get long on pullbacks to 1905, got to hold that 1902 here. And then the resistance is going to be the 1918.6. We know that's the 50% too. It's 1918.4 for the 50%. And we have the potential later on in the week if we move higher, but as I mentioned, it's right in here. 1932 is where I think we'll see some good value selling come in. And we can go and bolden this up. There we go. Let's go move into the crude oil market. But we're getting bad data all over the place. Hang on. Well, that caused a problem because I go pretty much off this 2-hour chart, so that's gonna. Okay, let's go on and so it says WTI formed a minor gravestone doji on the daily close for Thursday. Valuation is overstretched on the upside. A reasonable pullback is 56.73 is in the cards. A blowout to new highs, target 61.38. Well, let's go move on here. We did see on the daily. And we're talking about a reasonable pullback to 56.73. Well, right now we've got that bad data, so it's hard for me to see anything closer. So what we'll do is we're going to go just with this level that we had here before, which is 58.15, which looks like where they found some support anyway. So we'll go 58.15. And resistance, we're going to go off of this high. It was just above that close there, so it's going to be 59.21 for resistance. Obviously, still remains bullish. Onto the dollar yen. The dollar yen downside target of 927 remains on track after a pause at intermediate support or intermediate level of 1034. Upside resistance is 1044 followed by 1089. Support is 957. So let's go move into the dollar yen. Here's that 1034 that we were looking at from before. We did go on and get down there and saw pop off of that, and then we resumed our push lower. As I mentioned, we're actually looking for 927, which is the pivot, with resistance support at 957. So let's go mark that off. upside resistance is 1044 followed by 1089. So if we get that pushback, because the market's pretty oversold, very oversold, let's go and move into the 2 hour. Well, here, that's what we're coming up with right there, 1044. And then you could move this thing up. It could make a run up all the way up here to 1087. Looks like we made a run up here to this 23%. A little bit of resistance here. The 1044, the 38% doesn't even come in until 1063, so maybe we split the difference between that 1044 and 1087. But we're going to stick with our 1044 for resistance. As you mentioned, the 1063, which is a good level right there, because that'll coincide right there. It's at 38%, but our initial resistance is 1044. Nice bounce here in the Aussie yen back. The Aussie yen had a bearish engulfing week, portending further weakness in the medium term. When I say medium term, I'm actually looking out for the next 2 to 3 weeks, actually. So it's most people's medium term. My medium term is always like maybe a couple of days back. But no, I'm looking for something, obviously, since it's on a weekly. But it says for the weakness in the medium term, targeting a move to 75.25 with intermediate level of 76.06. Immediate support is 77.33 with resistance at 78.36. So let's move into that. Here's that 78.36 we're referencing. We'll go and take a look at this on a weekly. And boy, look how this weekly just gobbled up the previous other week. And I'm looking, like I said, for a much slower move over the medium term, a couple of weeks or longer. But on the short-term basis, which is what we're looking at, then our initial resistance is going to be right there, 78.36. Now the market's come off quite a bit. So once again, this can be your initial resistance. You may push a little bit higher, maybe even try and take out this 78.50 you see right there. But your initial resistance and today's is going to be 78.36. Now there might be some evening up. Remember, there's no data here in the States. Give a moment. Support for right now is going to be this 77.75. We'll use this one. And onto the dollar index. The dollar index held trendline support while closing above the last 4 days closes. Key level to take out for further upside would be 96.81. That would allow a challenge of 97.64. Immediate support is 96.24. So let's go and take a look at and what we're referring to here on the dollar. And here's that trend line, but I thought that was significant is the way the market came back. Yeah, last week looked like maybe, okay, we're starting to slide. Now we're going to see, maybe we'll even see a protracted correction in the dollar. And we came back with a vengeance. Now, they did run out of gas here at this 96.81, and that's going to be the key level to get above here. If we can get above that 96.81, we can open up the door to move much higher towards this 97.64. But we got to get above this 96.81. So that's going to be resistance for today. And I mentioned already here, support's going to be right there, 96.24. When you look on the 2-hour, it almost looks like a little bit of a mixed bag here. But as I mentioned before, is that 96.81 is going to be the key level to go and get above here. And without any U.S. data, we might kind of languish a little bit in the early to mid part of the U.S. session here. So kind of want to keep an eye at the overall bigger picture, which again is, it's going to be 96.81 with support 96.24. We'll move on to the gold market. Gold finished with the high close for the week on Friday. The dollar's kept the shiny metal at bay despite lower interest rates. Equity pullback may be the catalyst for an eventual revisit of 1341. Short-term support is 1303, with key support being at 1293. So let's go move into the gold. And you can see we're still continuing to push higher. The only ointment or flying the ointment has been the, with interest rates continuing to move lower, why we haven't seen gold move higher. But as I mentioned, the dollar might have been part of the reason, but with equity starting to move lower, I believe in the medium term, once again, a couple of weeks out, could even be longer than that, but over the course of the next couple of weeks, we have the potential for the gold to revisit this 1391. Now, as I mentioned, support's going to be here at 1303. We're going to give it a little bit of extra leeway in case you were to pull back. I think on a short-term basis, you can probably even look here right there at 1309. But from a little bit longer term basis, it's at 1303. For the bias chart support, we'll put it right there, 1309, because it's still $8 away. Resistance on the short term is this old friend here, 1323. That stays in check here. Now I wanted to go and move into the bunds, but we got a problem with some data. Okay, oh great, it corrected itself. Fantastic. Now we've pared back a bit here in the bunds on the good, I won't say good, it's just better than expected German data. Resistance is going to come in right here at this key level, 67.24, a ways away, but you can see how volatile this market can be. And resistance comes in right there, 67.76. Well, I think right now, for today, it's going to be a little bit tougher. Resistance will come in right there at 67.60. Resistance in the DAX is going to come in right there, 11,450, and we'll give it just a room for some stops there. So it's going to be 11,471 on the upside. I think we've kind of turned the corner on this right now. So resist support now is going to come in at 11,322. You're trying to push up a little bit higher, but remember, our entry resistance is 1341 we have here, but we'd have to get above 1360 to negate the downside. So that calls it a day here for the European crossover webinar, and I'll get this posted in the room, and thanks for joining us here on the webinar.